Welcome. My name is Jackie Arnott and I'm a Relationship Manager here at T. Rowe Price, and I'm joined by Randal, Head of Australian Equities here at T. Rowe Price and Portfolio Manager of the MIQ Australian Equities SMA. Randal, thank you for joining us.
Thanks, Jackie.
So it's been another interesting quarter for investors. Market highs and value continue to dominate headlines coming out of the recovery. What are some of the other highlights for this quarter?
I'd highlight a few things. Firstly, as you say, very strong market performance. So the Australian market was up a little over 4% for the quarter. The value rotation continued also. What was interesting is that we had a reporting season in February, and it was one of the strongest reporting seasons we've seen for quite some time. So we saw earnings upgrades in the order of 10% across the market. And it was really driven by what happened with the miners and commodity prices, and iron ore being one of the key commodities that led to the upgrades there. Banks also saw big upgrades, and that was because the bad and doubtful debts really came in far lower than expected. But generally, you saw a lot of domestic strength as well. So if you think about a lot of the retail names and consumer businesses, they did well. So I'd say this quarter was characterised by a strong market performance, but also really strong earnings performance. And that actually saw that the market multiple actually came down a little bit, because whilst the market went higher, the earnings expectation and the earnings upgrade was actually higher than the market move. So multiples have come down a little bit to a more normal or reasonable level, which is actually quite good and I think supports ongoing market strength going forward.
And so I've heard you talk more recently about sort of this inevitable end to the inflation trade. What does that mean for investors when this acceleration ends?
It's a really important question I think people need to think about. And that is, we know in 2021 we're going to get a strong bump to growth. We'll see inflation go up. And that's because of all the stimulus. So fiscal stimulus, monetary policy support as well. And obviously we're going to be cycling the really weak period that we had last year. So that happens in 2021. But I think it's really important to think what happens beyond that. So in 2022 and beyond, you kind of got to think about that's going to be the post-COVID normal. And when we think about that period, what we think is going to happen is that growth's going to fade. We're going to go from fiscal stimulus to fiscal fade. And a lot of the trends that we saw previously that were driving markets and economies going into COVID, we think are going to reassert themselves. So we think that market leadership is going to change when we get into 22 and 23, and it's going to look more like pre-COVID, where it's going to be quality growth names that are going to be driving the market. And this kind of period we've had where cyclicals do well and the value rotation dominates is actually going to peter out towards the end of this year.
Okay, so bringing that back to your portfolio, how are you positioning right now for this, again, possible rotation and some of the unique opportunities that you're seeing in the Australian market?
So there are kind of two key aspects of how we're positioned. So the first one is we think that the domestic strength is going to continue for longer than people think. And that's largely because if you think about the targets that the RBA set, the targets that the government set around the unemployment rate, they want it to be in the low fours. If you think about the fact that the borders are still closed, the vaccination program not going to plan, we think the borders are probably going to be closed for longer. So that's going to mean more support, we think, for the domestic market. And we can see that in the housing market right now. So we think that the domestic strength continues. And so, that's one of the key aspects to our positioning within the strategy. And so it's a number of cyclical growth names that we are positioned for to benefit from that. So think about Domain, think about Seek. On the consumer side, a company like Harvey Norman's also going to benefit. But also the other aspect to our positioning is, again, coming back to what we think happens in 2022 and beyond, is to position ourselves for that environment. So there we're increasing the quality growth names within the portfolio. So think about some of the healthcare names, some of the technology names. And whilst they're getting sold off in the current rotation now, we think that provides a really good opportunity to take those positions higher and get ready for what's going to come next.
Great. Well, thank you so much, Randal, for joining us. Thank you very much for joining us today. And if you have any further questions, please do contact your local T. Rowe Price representative.